The Evergrande Group is an umbrella corporation in China that started in 1996. The company has businesses that range from wealth management, electric cars, food and drink manufacturing, and even the country's biggest soccer team. But its bedrock is Evergrande Real Estate, one of China's largest builders. Evergrande Real Estate owns more than 1,300 projects in more than 280 cities across China. The reason we're discussing them now is that their stock price has tumbled 85% since the start of 2021, stemming from their struggle to meet their debt obligation. Evergrande expanded aggressively with more than $300 billion in loans. With the COVID-19 shutdowns and huge continued cost of development, they got tight on cash. After approaching their lenders, investor confidence dropped, further magnifying the issue. In the past year, the company has raised capital through high-interest loans from their employees and short-term financing from expensive, high-risk lenders. This Thursday, Evergrande has bond payments due in the amount of $84 million, which is unlikely to be able to afford. The result is significant selling in both the Asian and US markets. So why does this matter to us? Well, Evergrande owes more than 171 Chinese banks as well as 121 other financial firms. There's rumors that their outstanding debt obligation could be as high as $1.35 trillion. For perspective, the cost of the entire toxic asset recovery plan in 2008 was roughly $700 billion. We're talking about twice the size of the 2008 crisis from one company. As of last night, two other large developers in China are also collapsing. Hong Kong trading on Shanghai-based Sinic Group has halted when the company's stock dropped 87%. Zhanghao RF Properties dropped more than 67% in trading yesterday afternoon. Here's the connection. Unlike the US, the Chinese Communist Party does not have the luxury of printing money. The dollar remains the world trade standard, while the US yen is not. So government bailouts would likely require cash on hand. The question is, does the Chinese government have the money to fund these bailouts? If not, they'll be forced to borrow or to liquidate assets to fund the bailout plan. Well, as of January of this year, China owns $1.09 trillion in US treasuries, which amounts to about 4% of our national debt. That's second only to Japan, who also happens to be located in the Asian continent and is likely to be facing their own financial challenges as a result of these pending developer defaults. So what would happen if 4 to 8% of existing debt was just dumped on the market in favor of liquidity? Our national government runs on debt. When there's a surplus of anything, the price is going to go up. It's going to go down. And if there's $1 to $2 trillion in existing debt obligations being sold off for the Asian bailouts, our government is going to really have one of two choices. One, increased interest rates to attract new investment. Or two, print money to pay for government spending. In scenario number one, our government will be acting responsibly. It'll result in increased interest rates that will necessarily trickle down to consumer debt like credit cards, student loans, and mortgages. This beautiful housing market will immediately come to a screeching halt. Option number two is more likely. They'll create money out of thin air. The result will be inflation, a lot of inflation. We're already seeing this in the form of higher prices on everything: wages, food, housing, you name it. Next, we could see a lack of confidence in the dollar, triggering talk of a new world default currency and maybe even a new world default currency. That's real trouble for the US. The economies of the world are stuck between a rock and a hard place. The stock market's down yesterday and today. The volatility is real and a little frightening. But don't be afraid. We've seen this movie before. Go rent The Big Short. Watch it, take notes, and look for opportunity. You probably have some time to get your house in order. In 2007, the subprime industry disappeared overnight, but it took another 16 or 17 months before things really hit the fan. Evergrande is a big crack in the world of current economy. When the result really start to hit, most people are going to panic. Rule number one is don't panic. Take a deep breath and realize that crisis equals opportunity. We've got the opportunity here to come together again as a nation. We've got the opportunity to rediscover the strength and toughness of those who came before us, the things that made the U.S. the place that everybody wants to go and to live. We've got the opportunity to position ourselves individually and as a nation for financial success, even as the world may seem to be crumbling around us. So then now there's rule number 2. Rule number 2 is don't get distracted. Some things are important, some things are not. I've been guilty of chasing a new shiny object from time to time and arguing about whether or not my kids should have to wear masks to school. But you have to keep your eye on the ball. There's no sense working on the leaking faucet when the house is burning down around you. And then rule number 3 is be positive. Remember that this is just a moment. It'll pass. Even when the glass isn't even full, there's still a few drops at the bottom. There's always something to be thankful for, and the sun is always going to come up in the morning. The good Lord is still going to love you. I may be wrong about what's about to happen. There's a lot of what ifs in this video, and you may be watching this thinking, this guy's an idiot. Well, you won't be the first. And there was that one other time when I was wrong. But if I'm right, I hope you take my advice and you thrive in spite of the panic.